Done, Saurabh.
So
Yes,
now,
we can see you now.
okay,
Yes.
great. Thank you. So great. Thank you, Shivani. Thank you for that lovely and wonderful introduction to all the panel members. And moving on to my first question to Mr. Nilesh. Sir, everyone, knows that you have 25 years of rich experience in the industry in financial and capital market. Just wanted to, start from the very basic. You have started your career as a, relationship manager with ICICI Bank. So I just want you, so that if you can just describe your life journey and financial planning steps that you have taken, I think that would enlighten a lot of employees and would motivate them, to take step by step, things ahead.
So thank you, Gio, for inviting me over here. Thank you, Saurabh and Shivani and Sarvana. Uh, I lost my father at a very early age. My mother had to, do outside work to ensure that we had 2 square meals at home. So my beginnings are without money, to say the least. I have I've taken education on scholarships and free ships, and I'm grateful to all those people who provided me support to get educated. So the biggest investment which one can make is education. That's even more important than money. And in our culture, Saurabh, Saraswati Mata always gets worshipped along with Lakshmi Mata.
True.
The second thing, being Gujarati, Marwadi, we have been always told that money is not everything in life. Even when we had no money, and probably that's the reason why my mother was always telling me, Beta, paise ke piche mat bhagna. Money is not everything in life. Obviously, I respect my mother, but about money, I respect another gentleman called Warren Buffett. He made a statement that money is not everything in life, money is not important, but make sure that you have made enough money before you make such statement. I have genuinely believed that yes, money does not buy happiness, but without money also it's very, very difficult to be happy. So make money and then focus on everything else. What are the ways of making money? Well, it's very, very simple. It's very, very commonsensical. This is what our common wisdom has taught us over the years, over the centuries. Number one, little drops of water make an ocean. Whatever little you can save on a regular basis will help you create wealth, will help you attain financial freedom. In mutual fund, we call it systematic investment plan, but there are multiple ways of regularly saving and wisely investing to create financial freedom. The second thing is related to long-term investment. There's a saying in Gujarati which says that Utavare amba na pake. You cannot grow a mango without waiting for 12 years. And I haven't seen anyone complaining to God saying that I want delicious mango and why are you making me wait 12 years? People expect that as a part of the nature. Same way, money cannot grow on tree. You have to wait. You have to invest for long term to create wealth. The third and final thing is don't put all eggs in one basket. Again, people invest looking at past performance and then they ended up getting disappointed. But someone who creates a balanced portfolio, something invested in debt, something in equity, something in real estate, something in commodities like gold, something in offshore investment, that portfolio will help create growth and financial freedom over a period of time. So, money is important in life. Make sure that you do regular investment, you do asset allocation, and you do long term investment to get financial freedom.
Perfect. Thank you, sir. That would, I think, inspire a lot of people in terms of like, the way they're starting their journey. Some people have this struggle maybe during COVID period and also I think that would give a lot of inspiration, to all the people who are there. Moving on to Radhika, my next question to you is that, you are very inspirational and had great fan following in social medias, etc. So my first question to you here is that, what has inspired you to become what you are today, so that, all of us can get inspired.
So thank you to the entire team of Geo, Saurabh, Shivani, Saravna. Uh, before I answer that question, I must say I share a very special connection to Geo because many people know me through one of my more popular talks, "The Girl with a Broken Neck." Not many people know that that talk was not delivered at a global platform like TEDx. It was delivered at Geo Talks at the Geo Auditorium in Consoli. So. My first, so I have a very, very special connection to the Geo family. Um, I love what Nilesh Bhai said, and I think, I grew up in a generation where my father was born and, didn't have much education. He went to a Hindi medium school. In fact, he learned English at the age of 19. But, we were always brought up with the belief that I think hard work is extremely important. And he always said that if you can work hard, then each generation can take a leap. So I feel he perhaps took the biggest leap our family did by joining the government and joining the foreign service. And we've tried to say that you are more than your circumstances, and each of us can take a bigger generation leap. So he was the first one to join the foreign service. Thanks to him, we lived a more privileged existence, and thanks to him and a little bit of scholarships, I was the first one to go abroad. And I think progress is very, very important. So I think those are the values that we were brought up with. I think one thing that I have learned is that we are, and I should relate this back to money, is that while we've been taught to work hard, perhaps the one thing I learned later in life is that as Indians, we work very hard. Money should also work hard for us. So we work very hard to, improve our quality of life. We make small sacrifices. My grandmother would say, मैं घर से ना वो बस नहीं लेती थी, रिक्शा नहीं लेती थी घर जाने के लिए, मैं पैसे बचाती थी अगली जनरेशन के लिए. But can we also make money harder, work harder than us? And this is a younger generation of people that we are talking to. And at least in my generation, what we try to do is hopefully, and investing has become so much easier. As Mr. Kumar said today, it's not about lengthy forms. I was delighted to hear that. You can literally do this thanks to data and people like Geo and availability of digital very, very quickly. So I think the challenge is to work hard, to invest in ourselves, but also to build savings and let money work harder than us. I think one of the most special things and fortunate things I was able to do was start a business at a very young age. 24, 25. Now, the only reason I could do it is because I was financially independent. And I think that is the power of financial freedom. So I started earning at 21. I saved for 3 years. Because I saved, because I invested, and I made a lot of foolish mistakes. But the fact is that if you invest in anything decent, and I'll talk about funds later, you have a corpus. And then, even if you're 24, 25 in this country, you can make a decision to start a business, to fund your education, and you can make it without having to ask your father, father-in-law, and everybody else. So I think hard work is important, and saving money and investing money and making that money work hard so that you can enable your dreams is also equally important. So I would end with that.
Perfect. Thanks. I think all of us are really working hard. That's what Radhika said, and we should ensure that your money should work harder for you. So we need to be very receptive about our money, where we are spending, how in what all areas it just gets spent. So if we can be more receptive, and I think we'll be able to manage it more effectively. Moving on to Ajit. Many a times, like I had an opportunity to listen to you, to interview you. So you have always said that people do not decide their future; they decide their habits, and their habits decide their future. So most of the time you start with this. So I took an opportunity to start with this quotation. So again, I'll repeat this: people do not decide their future; they decide their habits, and their habits decide their future. According to you, what are some bad habits and some good savings or investment habits?
Thank you, Saurabh. You actually stole my thunder. So that's the only quote that I usually use because it does have an impact. But I've had pretty much a middle class upbringing like most of us. And if you ask me, this is not where I had thought I would end up. It was the quintessential story of middle class parents not allowing their kids to do alternate careers and just moving in either science, commerce, or arts. I wanted to be in the Indian Army. I wasn't allowed. So NDA wasn't allowed. And then I wanted to join NID. Then I wasn't allowed. So I just filled up an application form that my elder brother had done in commerce, and I just followed through, and here I am. So, like most of us, I think that sometimes, by serendipity or whatever, you end up. Thankfully, hard work and good luck and great mentors have helped me reach where I am. And I'd say that, when it comes to the subject of money, some of the insights that I would have gained as I've spoken to people or read books or met advisors is a starting point for all of us here in India or anywhere around the world is to realize is why is this so difficult? Why is this so confusing for all of us? And the reason is that for every self-respecting adult, the two things that they should know to control their future is health and wealth. And we are not taught this in schools, right? We don't learn about good nutrition or money management in schools. So when we get our first jobs and when we become adults, we start looking idhar udhar and say, "Arey, aapne kya kiya hai? Tumne kya kiya hai?" So you buy a stock here or a flat there or a property here, whatever you can do, and then we end up having a lot of financial anxiety because we haven't learned the basics. It's not taught in schools. It's not taught in schools in India. It's not taught in schools all around the world, at least in the way it should. The other difficulty for most of us when we deal with the subject of money in India, more specifically, is that we have four regulators that decide rules for one household wallet. So you have the Reserve Bank of India that thinks about rules on savings and loans. You have the SEBI for all the capital market part. You have IRDA for insurance, and now you have the PFRDA for pension. Whereas for an individual household, you want everything. And since there are four different sets of people who end up talking to you, it ends up being confusing. So I think it's important to know the source of financial anxiety. And as Shivani mentioned, if we can become more aware, it helps us along. I'd probably say that from a money mantra perspective, and Sarvana mentioned Morgan Housel and the psychology of money, also a favorite author of mine. I'd probably say that the simplest way that Morgan Housel explained to think about managing money is to manage it in 4 steps, right? And the 4 steps simply are: spend less than you earn, right? That's step number 1. Spend less than you earn, save the difference, invest in a diversified portfolio, which is what both Nilesh Bhai and Radhika were talking about. And the 4th step is have patience. Now, it's very simple, right? Spend less than you earn, save the difference, invest in a diversified portfolio, have patience. That's the rule for money management. But all of it's difficult. Let me tell you that spending less than you earn is difficult for a lot of people, especially in a digital environment. And the last step, having patience, is also difficult because we are humans at the end of the day, and we have lots of dreams and aspirations. So I'd stop there. I'm sure that we will bring out a lot more nuances about both behavioral or otherwise related to money. And I hope that we'll have a good conversation around it. Over to you, sir.
Sure. Thank you. I think, very, very valid point highlighted by you, Ajit, that, that good habits, bad habits, whatever we talk about, whatever we talk about, if that's being, taught to us at the school or probably at the high school level, probably, a lot of change, or I would say a lot of behavioral aspect it could bring us in terms of the way we manage our health and financial wellness. I think very valid point, and I think all of us, should take and I would say should motivate our children at least at the young age, some small lessons about money, etc., and how they can take it up. So I'll move to Mr. Kumar. Mr. Kumar, financial wellness, I would say that pre-COVID, or let's say 5 years back, was not a much discussed topic in the corporates. Normally, we used to do a lot of activities in the organization, but post-COVID, we have seen a lot of awareness about the financial wellness activities, or maybe mental health wellness, etc. A lot of initiatives are being taken by the organization. So, according to you, what should be the role of an organization towards implementation and also, measuring its effectiveness?
Yeah, sort of. So you rightly mentioned. I think COVID is a eye opener for the entire community. I think whether you are in a very secured environment or not, COVID has taught us that anything can happen, and we should be ready to face the challenges. We have an alternative mode to manage our day requirements as well as to also meet our requirements across. So we have seen that there's a lot of focus now on financial wellness to ensure that we have the right options available to all of them to look at what the best avenue for investing and how do we ensure that we create a separate corpus to manage our requirements. So organization, I think, as a part of uh, uh, organization need to look at creating that culture as well as an environment to bring financial wellness as a part of what every employee should know about and create an ecosystem or a platform. So organization, given that they have a reach, especially since I'm coming from treasury, we have a reach across all banks and all the institutions where we can have that discussion with them and then bring some kind of platform where we have all the products displayed to the. So we do it in RCP in our campus. Pre-COVID, we used to have all those banks coming and setting up stalls there and also explaining the various options, products available, whether it's a simple salary savings account or going for housing loan or any other personal loan requirement. So these are, I think, more of a necessity now rather than just an additional employee benefit. So you said it right. So financial wellness is something which has to start right from the time the employee joins the organization. He should be engaged with that kind of a environment setup where we also get some understanding as to what are the options available, how do we manage the future, what kind of retirement options are there. I think in today's world, we have seen people looking for instant gratification. But if we delay gratification, we can make way for anticipation of greater rewards. That's how, yeah, I'm from the old school of thought, but uh, that's something which I strongly believe. And we have seen that job security looks like a concept of past now, and savings and investments to start early in life so that our future is not only secure, but we'll have enough to manage our own lifestyle. So we have seen in the COVID times people taking a sabbatical to focus on self-growth. They are migrating to different locations and taking jobs which are less rewarding currently than what it would pay off in the long run. So all this could be possible only if we look at having the right kind of investment product, investment goals, and start implementing them at the right time. So organization will has to play a very strong role to ensure that employees are well aware of what are the options available, the tools available, and accordingly decide their investment strategy.
Sure. That's great. And I would just like to share my experience with you, sir. I didn't had an opportunity to interact with you personally, but we are doing this financial wellness challenge in Reliance Jio from last 1.5 years. Every bi-monthly, once in a quarter, we organize this challenge. It's a 1 month program whereby employees enroll themselves in the challenge. So in last three challenge, we have 500 plus employees who have enrolled in each of the challenge. We do webinar each week. We also help them in terms of one-to-one consultancy over calls or maybe over Zoom, so that sometimes people are not comfortable asking their personal questions. And after the 4 weeks challenge, we took up an exam, and a certificate is also being given by Geo to all their employees. And the qualifying marks is also very high. It has kept at 80%. So I'd like to share the results. When we did the first financial wellness challenge, that they were top three, but there were 40 qualifiers. When we did the second financial wellness challenge, we have almost 50 qualifiers. And this last financial wellness challenge, when we did in the month of February, you won't believe, sir, we had five people who scored 100. Otherwise, we have 2 to 3 people scoring 100, and 94 people qualified. They scored above 80% in the Q&A that we had. So again, as you said, rightly said, it's a continuous process. And I'm personally seeing, the kind of the development that is happening, the curiosity, the awareness that, it's happening. Again, moving on to the same question, moving to Radhika, what do you think certain tips or maybe certain strategies or activities which can be done in an organization, so that we can scale up the entire process of the financial wellness?
So I think one, it is very heartening to hear that organizations, and it's very heartening to hear Saravna talk about the fact that organizations are having these conversations around financial independence. Uh, this is financial year end and this is March, and typically as organizations we put in tremendous effort, and sometimes I keep joking that I don't know if employees see it or not, but we put in so much effort on the appraisal cycles, the bonus cycles, how to reward our employees. So reward has become almost, a science, and everybody talks about it. But, ultimately, how employees use the earnings that they have to systematically plan and live a better life is very, very important. We've seen this. We've seen our own mothers in our house. You can have very, very limited resources, but if they're optimized right, then the household runs right. Children within a limited resources, everything is done. So a few things can be done. One is, I think Ajit talked about the fact that perhaps we didn't grow up with an awareness of personal finance in schools. The basics of investing, the basics of asset classes, I think organizations can give more awareness of them. If I know the basics of how to start an SIP, what is equity, what is fixed income, what are the basic components of that balanced portfolio that we talk about, just that basic awareness, if employees have, because I always believe that while investing can happen at the click of a button, informed investors make better investors. So you have the right expectations, a little bit of knowledge, I think will go a long way. So just empowering people with a little bit of knowledge is important. The second thing is, I think, helping people, young people, cultivate habits. I always say, for instance, if we are salaried individuals, I'm also a salaried individual. If organizations cannot mandate but encourage employees to put a certain amount towards savings, I mean, the great thing about taxation is you have no choice but to pay it. I always think of my monthly savings as a tax. I always think of my SIP as a tax. I have no choice but to do it. So if you can inculcate those basic habits that try and save 10% of your post tax income, 20% of your post tax income, and work with an employee towards setting up those habits, because I think if you set up those habits in your 20s or as early as you can, then those habits compound. And maybe if I start an SIP, as you have a pay hike, please top up that SIP. So I think setting in place basic habits. And third, I think encouraging employees to have goals. I truly believe investing is not a horse race. It is not complicated. It is not about me beating Saurabh or me beating Saravna. We ultimately invest for a purpose, and that is to make life more comfortable. So encouraging people to be goal oriented will go a long way.
Perfect. I think that's rightly said that it's not a horse race and we need to be goal oriented. So whatever you're earning, you just need to link your investments with a purpose and a goal, and then actually we can cherish what we have actually been able to attain. Moving on to Nilesh, again the same question in a different format from an organization perspective. What do you think? What all other initiatives an organization take in terms of maybe educating, and maybe other some of the other strategies, like maybe this challenge is one part which we are doing, so again we can also get motivated and we can implement the new stuffs.
So apart from what Radhika mentioned, there are some practical things which I'll recommend Geo to do. One, please enroll your employees for national new pension scheme. A contribution made by employer on behalf of employee is completely exempt for tax. If you are in the bracket of, let's say, 30% tax, a 10% contribution means you have got incremental 3% salary. If you are giving 10% salary increment this year, it can actually become 13% if people enroll in new pension scheme. Apart from that, there is 50,000 rupee additional limit for deduction over and above your 1,50,000 rupee limit. More importantly, new pension scheme forces you to invest on a longer term basis. It's available at a very, very, very low expense ratio of just 10 basis point. There is no financial product in India which is available at that rate. So please, please, please push new pension scheme in your employee base. And do remember, this is coming from a mutual fund manager who doesn't benefit by any way if you invest in new pension scheme. The second thing which you should focus upon is hand-holding employees. Now, Saurabh, you are doing this seminar today. Great. But in the month of March, April, May 2020, when COVID came and lockdown was there, many people were wondering about what future holds. Markets had corrected big time. Their portfolios were in losses. There was despair about the future. In those times, if company organizes a call like this, or even person like Sarvana or Shivani goes and tells employee, "Ghabrana mat, theek ho jayega aage." Those simple words of assurances coming from top will make a big difference to the employees. They will hold on to their investments. If they are lucky or smart or both, they will top up their investments in that period. Do remember that a senior professional within your workplace giving you a confidence, giving you an assurance will go a long way in handholding the employee. The third thing, unfortunately in India, we don't have 401k equivalent system. We have provident fund, which is mandatorily deducted. From this year onwards, you will pay interest, you'll pay tax on interest income on PF balances. So the post-tax returns will come down. Now, how do we ensure that we create a 401k equivalent plan which has contributed to Americans becoming rich? There are n number of examples today which shows that if you invested in PF or public provident fund PPF or voluntary provident fund and compare that to your investment in equity savings scheme, equity linked savings schemes, ELSS, your returns could have been multiple times, your portfolio could have been multiple times. I will recommend Geo's HR to work with mutual funds where we can encourage your employees to begin their investment journey through systematic investment plan for tax benefit in equity linked savings schemes, for other funds also for their financial freedom. And that way, they will be able to replicate something akin to 401k in US, which is contributing to the wealth of Americans. All these things, make a small beginning, but over a period of time, you will see great results coming out of this.
Perfect. That's great. And I think it gives us a collective responsibility for all of us, to come strategize something. So as Nilesh said, messages coming from top, it's goes down to bottom in a very, very serious way. So, sir, I would need your support, going ahead, Sarvanan sir, to, whenever we do season 4, 5, etc. So we just want some of your time, if you can just come and address to the employees. I think that would motivate, and again, will take up the entire level, will raise the entire bar for the entire organization.
Yes, sir. I'll be happy to participate.
Yeah, moving on to Ajit. Again, Ajit, the same question, because I think this is the crux of today's webinar. According to you, again, certain maybe small maybe some tools, some strategies, or maybe some of the methods which maybe a financial advisor like us, how we can do it, the entire program in a more engaging way.
Sure, Saurabh. And I represent PGIM Mutual Fund, which is Prudential Global Investment Managers, which is the Prudential of the US. Very different from Prudential of UK, which is represented here by ICICI Prudential, as many people know. PGIM does a lot of financial wellness programs amongst corporates in the US and elsewhere, and does a lot of research related to this particular subject, and I can share some aspects of that surveys that they have done with large corporates, employees, and employers related to the subject of financial wellness. Number one is that 70% of leaders who have been surveyed do believe that financial stress affects productivity at the workplace, right? 57% of employees actually say that they do face financial stress and financial challenges. 28% of employees surveyed say that financial stress affects their work and affects their health as well. So there is enough evidence in these research and surveys conducted in terms of what are the challenges that employees do face and employers face. Coming to employers and the kind of work that can be done, I think the bottom line is that financially fit employees create financially fit organizations. So there is a direct linkage of having financially fit employees because it does impact productivity positively. So, as an employer, as you think about financial wellness and financial wellness programs, it is also important to set the objective. Is the objective to increase productivity? Is the objective to reduce cost? And when I say reduce cost, it means through things like absenteeism. Absenteeism can happen if people are stressed, whether financially or otherwise. And financially fit employees would result in lower absenteeism. So you can measure those things. But the biggest factor for which a lot of organizations globally undertake financial wellness programs is to attract talent and to retain talent, because that is the biggest challenge facing organizations anyway in almost all sectors. So one is to clearly have the objectives of the financial wellness programs that we run, and to make it holistic rather than piecemeal. And I'm glad that you are there as part of it. I must say that most of the surveys related to financial wellness in corporates in the developed world, amongst employees, say one factor loud and clear, which is that they'd like to see the involvement of top management and the empathy of top management while these programs are being done. And I'm so glad that Sarvana is part of this program and is addressing it. This gives confidence to everybody who's attending, saying this is not just another checklist. This is a commitment from the top management as well, that we believe this will help our employees going forward. So the challenges that employees today, as compared to maybe 10 years ago, there are many other challenges that people face. Employees face challenges of inflation, because health costs are increasing much more, education costs are increasing much more, people have more debt, digital spending is uncontrollable, very difficult to manage your habits when you can click and buy in today's environment compared to sort of 10 years ago. People face longevity risk, just the risk of living longer and your money having to outlast for a much longer period than generations in the past, and therefore maintaining a decent standard of living into retirement. So I think I will stop by saying that if there are things that employers, and especially here at Geo, as you do this, just adding to what Nilesh and Radhika said, is to measure your financial wellness progress, not by just doing the program, but by measuring the satisfaction score of employees if they see that this is actually getting helpful, to measure whether absenteeism is going down, to measure if we think productivity is increasing. So I think while doing a good program, it's also important to have measures. And I would suggest that surveying employees on a regular basis on the specific subject of financial wellness and the efficacy of the programs one does is also maybe something that can be taken on board.
Perfect. I think that gives us a lot of good insights in terms of how we should measure. Maybe we are doing it, but now we need to quantify it, and we need to showcase the results and the progress, and we need to work upon it. Great, thank you, Radhika. Moving on to you, a lot of female folks are now watching you. How would you encourage the women's basically to take part in active investing? Most of them are savers, but how just maybe would you advise them from migrating them from savers to investors?
So, sort of, firstly, I completely agree that there's no saver like an Indian woman. And as I said, this is something that you've learned from your mothers and mother-in-laws who manage households, and you've seen the quantum of that saving also during demonetization. I think the next step that Indian women have to make is investing. I would say two, three things to any woman who's listening to this conversation. And before I say that, I also would say, because I talk to a lot of young women through the medium of social media, this is changing. In my mother's generation, we were very happy to outsource investing to a family member, a husband, a son, a father. But I think today, because there is so much availability of info, there are so many platforms out there, advisors are out there. The 21-year-old working girl today wants to ask questions. So I think, one, this is changing. The few messages I have quickly are: one, do not outsource this. These Do not outsource it for a few reasons. One, you are fully capable of doing it. As Nilesh Bhai said in the beginning, investing is not complicated. It is about understanding the basics of having a diversified portfolio, having a sense of goals, checking off some of the basic boxes around tax planning. It is not complicated. If you can manage your household, if you can manage your career, then you can definitely manage investing. So one reason not to outsource it is it is not complicated. Second reason not to outsource it is, we talked about the professional unit, but as a family unit, the family makes goals together. And when women are involved in the goal planning exercise, then you make better goals as a family. In fact, I would encourage men on the call. The message is not only for women, to involve women in the financial planning exercise for the family. When a woman of the house comes and says, I want to take interest in the finances, don't be dismissive about it. Help her get into the process. And the third reason I would say it's important to get involved is that life is uncertain. We've seen during COVID, there are so many cases when a family member may be incapacitated. Unfortunately, you may lose a family member. Divorces happen, and the woman is sometimes left struggling to access her own money that she had made so many compromises to save. So there are many reasons to learn investing. That's the first thing I would say. And in terms of how to go about it, the mantras are the same. I think get a basic sense of what the asset classes are, invest in simple instruments, start habits like SIP, and always work towards your goals. I think women are very very good at setting goals कि 3 साल बाद ये achieve करना है, घर के लिए ये करना है, 5 साल बाद ये करना है. If you can just take those goals, put the long term goals in equity, the short term goals in debt, and the medium term goals in balanced instruments, I think you will be reasonably on your way. And I should leave you with this story that um, I have a nurse that comes and visits me because of some medical treatments in pregnancy. And I think she realized after a few interactions with me कि ये कुछ mutual fund industry की है. She's from the mutual fund industry. So she asked me one day while giving me this injection, she said, you are from mutual funds? I said, yeah. And she said, I want to start an SIP for my daughter. And I said, how did you think of this thought? She said, I kept hearing you talk about the word SIP when I was doing these injections. And I want my daughter to live sort of a better life than I did and to start much earlier. So I also end with hope and optimism that the younger Indian woman is getting far more evolved. She's not only learning, but she's also wanting to invest for a better future.
Perfect. I think that's really motivating, and I think that would motivate both men and women in terms of engaging their spouses to take part in active investing. Moving to Nilesh bhai, you have always talked like some very basics about behavior finance. We have seen sometimes when we buy particular shares, and if the price falls down, investor becomes a long-term investor. Let's suppose a trader usually becomes a long-term investor, and let's suppose today if I bought certain scripts for long-term, if it goes up 10%, so I'll just sell it. I become a short-term trader. So how to maintain this behavior biasness? Because when I'm interacting with the employees, this is one of the challenge which I'm facing in terms of the identifying, maybe creating a basket, and how to maintain that greed and fear, or maybe those cycles.
So Saurabh, by there is this incidents in Mahabharata. When the war was going to begin, just before previous evening, Krishna Bhagwan walks into Duryodhan's tent. And Krishna Bhagwan tries telling Duryodhan that you should not go to war. Pandavas are legitimate here. Try to give them 5 villages and they will not wage a battle. And Duryodhan disagrees to everything. Imagine Krishna, a god, unable to convince Duryodhan, a human. And then finally, after lots of talk, Duryodhan gives a statement, which is probably the best learning of Mahabharata. Janami dharmam, nachme pravrutti. Janami adharmam, nachme nivrutti. Oh great Krishna, please don't tell me what is right. I exactly know what is right, but I can't follow it. And please don't tell me what is wrong. I exactly know what is wrong, but I can't stay away from it. Now, all of us have a Duryodhan in us. We all know eating junk food is bad, but we still go out and eat. We all know doing exercise is good, doing yoga is good, but how many of us are able to get out of bed early in the morning and do that? So, number one, please recognize that there is a Duryodhan in us. Number two, get a Krishna for yourself who will be able to talk to you about your Duryodhan. Now, this is Kali Yuga, so Krishna Bhagavan is unlikely to come. So get a good mutual fund distributor, get a good registered investment advisor. They are not God for sure, but they are sounding board. They will tell you why you should invest for long term, why you should do asset allocation. They will handhold you in the period like March, April, May. They will tell you which fund to invest, which securities to invest. Their advice will help you balance between your greed and fear. As I said, investment is all about common sense, but it is not so commonly available. Finally, what I will recommend investors, that think your trading versus investment as two different things. Trading is like T20, where stop losses become critical. You do trading on a very small portfolio of your wealth. You don't trade entire wealth. You trade very, very small percentages. 99% of traders, in my opinion, will lose money and only 1% will make money. India's best known trader is Radhakishan Damani. I had the pleasure of meeting him in Flame Institute, Pune. He was addressing a group of students and I was also part of it. One student asked Radhakishan ji, Sir, मैं भी आपकी तरह ट्रेडर कैसे बनूं? Radhakishan ji replied, देख बेटा, मैंने अपने बच्चों के लिए डीमार्ट खड़ा किया है, उनको भी मैं ट्रेडिंग में नहीं आने दे रहा हूं. So don't try to be a trader, be an investor. So trading, please keep it on a very, very small percentage of your portfolio. Always go with stop loss. It's always short term. Investment is all about long term. Investment is all about averaging. जब आपकी शादी होती है और बीवी की तबीयत खराब होती है तो आप उसे छोड़ नहीं देते, आप उसके साथ रहते हैं, आप उसकी केयर करते हैं, आप उसे ठीक करने की कोशिश करते हैं. Same way it is about stocks. When you buy stock and prices go down without fundamentals deteriorating, it's an opportunity to buy more, not to divorce it. Stay invested for a longer term, make money. So these are very, very simple, commonsensical thing. Don't become a long-term investor because you have incurred trading loss. Trading loss means you have to cut your loss and move on. And if you have made short-term profit in investments, you don't book it. You let your profits run for a long period of time.
Perfect. I think very aptly explained with the Mahabharata example, because mythology is something which we all are connected with. We have been hearing maybe the we should continue, but I think after today's example, it would reverberate in our mind, and before we take any such action, we would recall the Duryodhana within us, and maybe we'll try to reach out maybe our Krishnas. Great, thanks. Moving on to Ajit, a lot of new asset classes are emerging. Maybe let's take an example of maybe new age companies like IPOs. A lot of retailers are getting fancy towards the new IPOs, although whether the companies are fundamentally good or not, or people are investing in other asset class like cryptos and all. So if at all, we have to invest, because again, certain element of calculated risk one can take. What percentage of our portfolio should be earmarked to maybe assets like crypto, or maybe certain new age companies where we just wanted to play and try our luck?
Sure, Saurabh. And what I would say is probably repeat something that Nilesh Bhai mentioned much earlier, that use common sense when it comes to investing and saving. And in that common sense, as both Shivani, even Radhika mentioned, that just to know the basics of certain aspects of this is important. So the way I would approach this question would be to say that the first uh, aspect which every individual should be aware of when they're thinking about financial wellness is that financial wellness is made up of three elements. There are just three elements to financial wellness. The first element of financial wellness is household budgeting, and getting a good grip on household budgeting. That itself is a challenge for people, and knowing household budgeting is the first step. The second step is to have a goal based approach to your money. What are you doing it for? The purpose that you're putting money aside for, and the kind of financial goals that you have. That's the second step. And the third step is to make sure that you have enough protection and insurance related to financial risks that you face. So those are the three steps. Household budgeting, having a goal-based approach, and protecting against risks. Now, when you think about, coming to your question about how much to allocate and what to do, I would say that for every individual, once you get your household budgeting, sort of understood, or have a grip on that, your next step is to figure out whether you have enough insurance. And that is because when you're young and you're earning, you want to protect your family against any financial shock. So making sure that you have the appropriate term insurances and the health insurances is critical. The next step after that is to really establish an emergency fund, just to make sure that if there is a financial shock at the household, can you manage expenses for 6 months to a year? Only after you've done these three steps, which is getting a grip on household budgeting, doing your protection and insurances, having an emergency fund, should you then look about investments and things like that. That's the sequence to follow. Coming to investments and your question, I would say, and repeating a little bit earlier by what Nilesh Bhai also mentioned, I would say that there are 7 asset classes that any individual anywhere in the world can invest into. So it's equity, bonds and debentures, or what we call fixed income, gold and precious metals, other commodities, currency, real estate, and a category called alternates. The category of alternates have things like private equity, investing in paintings, investing in wine, investing in crypto. All of that can be put into the bucket of alternates. And the way to simply understand it is that alternates are that category for which enough information is not available for a reasonable long period of time for you to take an intelligent decision based on past experience, because it's all happening in very closed door kind of environments, whether you talk about private equity kind of investments or paintings and auctions. People invest in paintings and sculptures and make a lot of money, right? So it's an alternate asset class. Same's the case with crypto. It's new and there's not much information around it. So I would not say that because of that you need to say no to it or avoid it, But you need to have a sense that if I have these 7 asset classes, and if I were to pick 3 or 4 of them to diversify myself, what percentage of money should I put into those things which might give me a higher return, but then there's not too much information for me to take a decision, and therefore I may also have a higher loss related to it. And that bucket, you can define it. When you think about experts define that as your lottery bucket. Your lottery bucket could be 10% of your overall portfolio or 5% of your overall portfolio. If you're very young and you think you can take a lot of risk, you can make it 15%. But please remember that 15% can potentially go to zero. So your percentage that you put in things like crypto or completely new age kind of investments should be those investments where you don't know what you might get out of it. You may double or treble, or you may go to zero. And the typical behavioral mistake that people tend to make is that by listening to the news, listening to social media, listening to everything that's going around, they think बहुत पैसे बनेंगे, चलो सारे पैसे वहीं लगा देते हैं, या 50 रुपए लगा देते हैं, या 30 रुपए लगा देते हैं, and they put a larger proportion into that bucket. So mentally think of it as buckets. As Radhika mentioned, have one bucket which is for saving and all your fixed income safe investments, one bucket which is your equity investment so that you can keep growing your wealth, and have a small little bucket which is your lottery bucket. Take a bet, but be sure that that's the bet, that proportion is something that you're willing to lose. Honestly, today, if somebody had a lakh of rupees and were thinking of investing into, let's say, crypto, I would say, okay, I'm going to buy a painting that I like of a good artist. You buy crypto. 5 years, let's meet up after 5 years. I don't know who's going to make the money. Maybe the painting and the artist will appreciate. Maybe crypto will appreciate. There's no information. So it's a very difficult bucket. But have a bucket, there's no harm in it. But define that percentage based on what you think you're willing to lose. I think that's the approach that I would give to, the question that you asked.
Perfect. I think very aptly said. Bucketing is really very, very important. Understanding the quantum that one needs to put in, and identify and don't get carried away by fear of missing out. Like, yeah, the FOMO impact, which most of us, are now investing because of primarily of, being the FOMO effect. So, Radhika, moving on to probably the last question. There is a trend towards SIPs, 11,000 crores of monthly inflows we are seeing, and Indians are deepening up a faith in putting their savings in the growth assets like equity mutual funds, hybrid equity, etc. Do you think it is the simplest but yet most powerful tool for long-term wealth creation?
I think unequivocally, yes. If you had to ask me, perhaps the best thing that the mutual fund industry has created, I think it is the tool of SIP. And it is for many reasons. One is, I think it cultivates a sense of habits, and habits cultivate a sense of discipline. So you are forced to save, and you are forced to invest, and you are forced to do it regularly. And once it becomes a habit, people don't realize that they start a little SIP and 10 10 15 साल बाद उन्होंने घर खरीद लिया होता है SIP के जरिए, या गाड़ी खरीद ली होती है, and it is all the result of a habit. So one, I think it is a good reason because of the habit. Second, it is good because there is a myth that to start investing आपको बहुत बड़ा पैसा चाहिए. We quote big numbers that Warren Buffett made this or Rakesh Jhunjhunwala made this, but the fact is that today you can start investing in the best Indian companies with a very small quantum. Many of us are salaried people, and people have various expenses, and there's so much you need to do to make the basics meet. But investing can start with as little as 500 rupees in an SIP. I think that is the second most powerful thing. The third powerful thing about an SIP is, there is always this question कि market का क्या लगता है? When do I invest in the market? Market में अच्छा time है या बुरा time है? And I believe most people are terrible at timing the market. You know, there will be someone who came to me. I think index was at 17,000, and that person came to me and said that if I know that the Nifty is going to go to 12,000 from 17,000, then should I sell all my money and invest again at 12,000? And I told him two things. I said, firstly, if you know that, you are far wiser than me, so you should not be coming to me for advice. Secondly, would you have the courage when the market fell 30% and the news said all red, stocks are down, India ka kuch nahi hone wala, we are all very sentimental people. Would you have the courage to invest then? Chances are no. So SIP takes out this whole market timing. In the cycle of investing, SIP is invest, 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 invest. And you stop worrying about what happens when the market falls or when the market rises. So, and sometimes I think we underestimate the investment returns from SIP. You talked about SIP in an equity fund. I do an SIP in a dynamic asset allocation slash balanced advantage fund, which is essentially a combination of equity and debt. So it's a conservative product. My SIP returns for the last I think 7 years are about 15% CAGR. I have done nothing. I have not done anything. People assume if you're in the investment industry, आप बहुत कुछ glamorous कर रहे हो, you'll have fancy alternative assets, you'll keep moving your portfolio. In March 2020, I did nothing. I just let my SIPs continue. And as a result of the SIPs, I was looking at this and suddenly I'm sitting at 15% CAGR without stress. So I think simple, stress free investing. And I'm glad you asked this question because you can invest and lead a normal life and make meaningful returns by doing very simple things as a result of habits. And that is what your SIP is. And look, it's 11,000 crores today. And the FM recently acknowledged that it's not foreign investors, but domestic investors that needed to be applauded. तो छोटे काम की गूंज भी बहुत दूर तक गई है.
Perfect. As rightly said, that small steps can lead to your big results, and that's what, as Nilesh Bhai initially said, that boon boon karke, drop by drop, we need to do investments. So great. On that note, I think we have covered a lot of aspects. We have covered aspects of basics of financial planning, how one should do, how one should take care of the behavior biasness, the relevance of maybe SIP, which has become a very common product, but yes, it is still more powerful, alternatives, how we should tackle and how we should build it in our portfolio. So at the end, I would just like to ask each one of you some, I would say, funny or maybe some personal questions. Starting with Nilesh Bhai, just describe your investing style maybe in few words. You need to unmute, sir.
जो मैं बोलता हूँ वही करता हूँ.
Okay.
I have my SIPs, I have my asset allocation, I have my long-term investing. But Saurabh, I just want to say one thing about SIP. See, SIP is simple. SIP is commonsensical, as Radhika mentioned. But SIP में अग्नि परीक्षा भी है. In March 20, if you had seen our equity funds SIP return, for 3 years we had given negative return. For 5 years we had given lower return than savings bank account. And for 10 years our returns had come down by half comparable to bank fixed deposits. Many investors would have disappointed that क्या performance है, 3 साल से पैसा दिया और पैसा कम हो गया. But people who continued their SIP today are getting 15, 20, 25% return. People who topped up are getting 20, 25, 30% return. So do remember, there is no free lunch. Risk and return go together. And कुछ पाने के लिए अग्नि परीक्षा देना जरूरी है.
Perfect. So next question, again, we just have 5 questions for you, quick questions. What is one thing that you regret spending money on?
Well, I have many regrets in my life. And, when I started getting money, I ended up spending on many unnecessary items, which was not necessary. I could have lived with many things which I didn't need.
Okay. Your favorite pastime activity?
Reading. I keep on reading anything which is available.
Okay. And last question, are you using Reliance Jio services? That question is from Shivani Z. Yeah.
Yes, in my house, fortunately, Jio was able to provide connection and it worked wonderfully for, work from home environment. So yes, I'm a proud customer of Jio.
Yeah, great. Moving on to Radhika with same set of question, your investing style in few words.
Like dal chawal, very diversified between 2 asset classes, very simple, very basic, but works in the long term.
Perfect. Any one thing you would regret spending money on?
I agree with Nilesh. I'm just shifting houses and I realize how many extra clothes I have bought जो cupboard में कभी इस्तेमाल ही नहीं किए थे.
Uh, Great. And your favorite pastime activity?
Writing. I mean, I have a
Favorite
book
writing.
coming out and also poetry.
Yeah, that we can see in, your Twitter and all. Yeah. Great. And again, connectivity. Are you using geo connectivity?
Yes, I switched to being a Geo customer during lockdown at home. I'm very happy.
Great. So moving on to Ajit, your investing style in few words.
Well, I have a financial planner and a written financial plan for since the last 10 years. So my investment style is my financial planner's asset allocation based on whatever we discussed were our financial goals. I have two kids. My daughter is 19 and studying abroad. My son is 15. Of course, we have a retirement goal and one or two other family goals. So sort of 10 years ago, since I was going and talking in conferences to people about the need for having a proper disciplined approach to managing money, having a financial plan, I realized that being part of the industry, we sometimes take ourselves to be sort of bigger experts and that we can do it ourselves. And money is behavioral, money is emotional. So it's always good to have a trusted advisor do it for you. So that's what I've done with sort of my money since the last 10 years, and I have no regrets on that. It's gone perfectly and even better than expected.
Perfect. I think that will motivate a lot of us, even, the treasury heads or the CEOs or probably who have been managing funds, they also have their own advisors. I think this would also motivate me. I was also delaying it, to have an advisor for myself. But I think, after this call, surely I'll just get it done and I'll, just update you on that. What is one thing you regret spending money on?
I think sort of it's before I had a financial plan, I was overexposed to real estate. I think it's in the context that we live, way back earlier to sort of around the 2000, 2005. I just entered the industry, but much of what we were doing in, our, how we manage our money was based on what you hear around. And real estate was a good investment. And I realized that I was just overexposed with my savings to having bought a second home, an expensive home. And I found that, even daily management at home was difficult because everything was this big loan that I had for this beautiful house that I had wanted to purchase. But when I made the correction in way back, around 2011, 12 with my financial advisor, the first thing I did was to sell out my real estate, but make sure that I put the money back, reduce my debt, and put my money back based on my sort of financial goals. But I regret that at that time, I went through a lot of tough times for years just because I had a big loan and I was just thinking of feeding the EMIs for that loan.
Perfect. Great. And your favorite pastime activity, sir?
I'd repeat the same thing that Nilesh Bhai said. I read anything and everything that, comes my way. I find that there's so much of connection to, even financial well-being. If you're reading things related, for instance, to health or history, and even financial history or other history. So I love reading. So that's my biggest pastime.
Perfect. And again, the last question, are you using the geo connectivity?
Well, I'm not. So I used to, and I changed my home recently. So I have only one connection, and I am actually in the process of getting Geo as my second connection. We always had two broadband connections at home, so probably soon because I was always a customer.
So great. Anybody in the audience who is from the sales team? So I'll get you one very, very good solid lead. So on that note, I would just invite Mr. Kumar once again, just to summarize his thoughts on what all experts I know the panels have said, and let us all collectively work together in terms of incorporating the suggestions and implementing it. Yeah, over to you, sir.